In today's video, we're going to be comparing three stocks that have been generating significant buzz in the investment community: AMC Entertainment, AMC, Advanced Micro Devices, AMD, and Medical Properties Trust, MPW. These three stocks come from drastically different sectors: entertainment, technology, and real estate, but each brings something unique to the table in terms of investment potential. By the end of this video, we hope to provide you with a clearer understanding of the opportunities and risks associated with each of these companies and help you decide which one might be right for your investment strategy. So, let's get started by breaking down each stock in detail and discussing their recent performance, financials, business models, and future outlook. 1. AMC Entertainment Holdings, AMC. AMC has become one of the most famous, or perhaps infamous, stocks in recent years, especially among retail investors. The company found itself at the center of a stock market frenzy in 2021, largely fueled by the rise of meme stocks and online communities like Reddit's Wall Street Bets. But outside of the social media hype, what exactly does AMC bring to the table, and where does it stand as an investment today? Business overview. AMC is the largest movie theater chain in the world, with over 1,000 theaters and 11,000 screens globally. The company has been a dominant force in the entertainment industry for decades, providing moviegoers with an unparalleled cinematic experience. However, the COVID-19 pandemic devastated the movie theater industry, forcing theaters to close and pushing AMC's revenue to historic lows. As a result, AMC faced severe liquidity issues and teetered on the brink of bankruptcy in 2020. But AMC wasn't just saved by traditional means. It was rescued by retail investors. The stock became a poster child for the meme stock movement, where individual investors banded together to buy shares and options, driving the stock price up to astronomical levels. This surge allowed AMC to raise capital, restructure its debt, and avoid bankruptcy. But it also made AMC a speculative asset. Stock performance. AMC stock price saw an unprecedented rise in early 2021, climbing from around $2 per share to over $70 at its peak. The rally was driven by retail traders who were intent on creating a short squeeze by buying up shares, forcing institutional investors who had shorted the stock to buy back shares at higher prices. This caused a ripple effect, sending the stock price into the stratosphere. Since then, AMC stock has come down significantly but remains highly volatile, trading in large swings depending on market sentiment. Its value is often more reflective of investor psychology and social media buzz rather than traditional financial metrics like earnings or cash flow. Financials and challenges. Looking at AMC's financials, the company is still grappling with a large amount of debt, which it accumulated during the pandemic to stay afloat. In its latest earnings report, AMC showed some recovery, with theater attendance increasing as more blockbuster films are released. However, the company remains in a precarious position, as it has yet to fully return to pre-pandemic revenue levels. The entertainment landscape has also changed. The rise of streaming services like Netflix, Disney+, and HBO Max has posed a significant threat to movie theaters. More studios are opting for direct-to-streaming releases or shorter theater windows, which could limit AMC's long-term growth prospects. Investment potential. AMC remains a highly speculative investment. For those willing to take on extreme risk, AMC could still offer opportunities for short-term gains due to its continued volatility. However, its long-term viability as a business depends on its ability to manage debt, attract more foot traffic, and compete in an entertainment industry increasingly dominated by streaming services. Investors should approach AMC with caution, understanding that it is more of a speculative bet than a traditional value or growth stock. 2. Advanced Micro Devices, AMD. Now let's shift gears to AMD, a company that represents the cutting edge of the technology sector. Unlike AMC, AMD is not just surviving but thriving, especially in an era where semiconductors are critical to the functioning of nearly every modern technology. Let's take a closer look at what makes AMD one of the hottest stocks in the tech world. Business overview. Advanced Micro Devices, AMD, designs and manufactures semiconductor chips used in everything from personal computers and gaming consoles to data centers and artificial intelligence (AI) applications. AMD has built a reputation for creating high-performance processors and graphics cards that compete directly with industry heavyweights like Intel and Nvidia. In recent years, AMD has gained market share in both central processing units (CPUs) and graphics processing units (GPUs), thanks to its superior product offerings and competitive pricing. Stock performance. AMD stock has been one of the best performers in the tech sector over the past decade. It has benefited from the global surge in demand for chips driven by technological advancements such as AI, cloud computing, 5G, and autonomous vehicles. AMD's ability to innovate and release products that outpace its competition, particularly Intel, has been key to its success. In 2020 and 2021, during the COVID-19 pandemic, demand for AMD's chips skyrocketed as consumers and businesses shifted to remote work and digital services. This demand, coupled with global semiconductor shortages, pushed AMD stock to new heights, making it a favorite among growth investors. However, like many tech stocks, AMD's share price has also experienced periods of volatility, particularly as macroeconomic factors such as inflation and interest rate hikes weigh on the broader market. Financials and growth drivers. AMD has seen remarkable revenue growth in recent years, fueled by strong demand in the gaming, data center, and PC markets. The company's acquisition of Xilinx, a leading player in adaptive computing, further bolstered its position in the semiconductor industry and expanded its product portfolio into new markets. One of the key drivers for AMD's growth is the ongoing global semiconductor shortage. As the world becomes increasingly reliant on technology, the demand for high-performance chips continues to rise, and AMD is well-positioned to capitalize on this trend. Additionally, with the proliferation of AI, machine learning, and high-performance computing, AMD is expected to play a central role in the next wave of technological innovation. Investment potential. For investors looking for long-term growth, AMD is an attractive option. The company's strong fundamentals, cutting-edge technology, and leadership in the semiconductor industry make it a solid choice for those who believe in the continued rise of tech-driven industries. However, it's worth noting that the semiconductor market is cyclical, meaning there could be periods of slower growth or increased competition. Nevertheless, AMD's position in key growth markets like AI, gaming, and cloud computing gives it significant upside potential over the long term. 3. Medical Properties Trust (MPW). Finally, let's move to a completely different sector, real estate, with Medical Properties Trust (MPW). MPW operates as a real estate investment trust (REIT), focused on healthcare facilities, primarily hospitals. Unlike the volatility of AMC or the high-growth potential of AMD, MPW offers a more stable, income-focused investment, which appeals to a different kind of investor. Business overview. Medical Properties Trust (MPW) is one of the world's largest owners of hospital real estate. The company acquires, develops, and leases healthcare facilities to operators under long-term, net lease agreements. As a REIT, MPW is required by law to distribute a large portion of its earnings to shareholders in the form of dividends, making it an appealing option for income-focused investors. The healthcare industry is considered a defensive sector, meaning it tends to remain relatively stable even during economic downturns. This makes MPW an attractive investment for those seeking stability and steady income. Hospitals and healthcare facilities are essential infrastructure, and the demand for healthcare services continues to rise due to an aging global population. Stock performance. MPW stock has generally been less volatile than the broader market, as REITs are known for their stability. However, the stock has faced some challenges in recent years, particularly due to concerns about the financial health of its tenants, many of whom were hit hard by the pandemic. Despite these concerns, MPW has maintained its dividend payments, which is a key draw for investors seeking reliable income. Financials and risks. MPW's financial performance is heavily tied to the ability of its tenants to pay rent. While the healthcare industry is generally stable, hospitals are not immune to financial difficulties, especially after the strain caused by the COVID-19 pandemic. Some investors have raised concerns about the creditworthiness of MPW's tenants, which could pose risks to the company's cash flow if rent payments are missed. Another factor to consider is interest rates. As a REIT, MPW relies on borrowing to finance its acquisitions, and higher interest rates could increase its cost of capital. This is particularly relevant in the current economic environment, where central banks are raising rates to combat inflation. Higher interest rates could also make REITs less attractive to investors compared to other income-generating assets like bonds. Investment potential. For investors looking for a stable, income-generating asset, MPW offers an attractive dividend yield and exposure to the healthcare sector. The company's focus on essential infrastructure like hospitals gives it a degree of safety not found in more speculative stocks. However, investors should be mindful of the risks associated with tenant financial health and interest rate fluctuations. MPW is best suited for conservative investors seeking reliable income rather than those looking for high-growth opportunities. Conclusion. Which stock should you choose? So, how do AMC, AMD, and MPW stack up against each other, and which stock should you consider adding to your portfolio? AMC is a high-risk, high-reward play. If you're a speculative investor with a high tolerance for volatility and believe in the power of retail traders or potential market rebounds in the entertainment industry, AMC might be worth a gamble. However, the company's heavy debt load and uncertain future make it a risky choice for long-term investors. AMD is a growth stock for investors who believe in the future of technology. With its leadership in the semiconductor space and strong position in key growth areas like AI and cloud computing, AMD offers significant upside potential. However, investors should be aware of the cyclical nature of the semiconductor industry, which can lead to periods of volatility. MPW offers stability and income, making it an appealing option for conservative investors. Its focus on healthcare facilities provides a defensive investment that can deliver reliable dividend income. While it lacks the growth potential of a tech stock like AMD, it offers a safer, more predictable return for income-focused portfolios. Ultimately, the right stock for you depends on your individual investment goals, risk tolerance, and market outlook. Diversification is always key. So balancing a portfolio with a mix of speculative, growth, and income-producing stocks could be the best strategy to navigate the ever-changing stock market.